So how do you know when a stock is moving up, down, or sideways? I go through my reviews and kind of tell you up, down, and sideways. I'm going to go through a little bit of how to simplify your charts a little bit. First, I want to let you know this is not any kind of financial advice. I'm not doing that. I am showing you how to see technicals on trading charts and give historic reviews of things that have happened. Nobody can predict the future. You can only improve your odds by understanding more of what's going on. So I use simple moving averages because, unlike a lot of people, price aggregation over time is more important than the exact price of a stock in trades. So what I do is look at multiple time, and you'll see no candles on this chart. So we're going to go through and we're going to look at a standard chart that most people are used to looking at. This is bars. This is Tesla on Friday. This is pre-market. This is 4 o'clock in the morning. The NASDAQ right now is running 24. A lot of people are not aware of that, but you'll see right here it goes till 23:30, which is 11 o'clock, and it's Friday morning. And yeah, it's a little crazy now. It's working like Bitcoin, but what is this stock doing? It's hard to say. As I move the chart, things reposition themselves. But what if I was to put a moving average on here to smoothen out multiple times? Let's start with a 20. And what do we got? Okay, so now we're averaging out 20 time periods. And what do we see? We can actually see a direction. We can see kind of up, sideways. Let's condense this a little bit. And so we're into Friday. We can see a big jump here. It smoothens out all this activity here. But it still doesn't give us a lot of resolution based on short term. It takes a while for it to move. So let's take this over. I'm going to show you something different. Oh, this is different. We got something right here. Let's zoom in. Okay, all of a sudden we have green, 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 green. What is all this? Why is all this activity like that? And we're going to do it right here. And the time is 16. This is 4 o'clock. This is closing bell during regular trading hours. In about 1 o'clock right here, we see the price got over the 20 simple moving average. I'm going to add a couple more indicators to it. I'm going to add the 1, which is the closing price. I'm going to add the 4, and I'm going to add the 2. And I'll explain what each one of them does. So we have the 1, which is the average price, the closing price. And you can see the 1 is above the 2. The 2 is 2 periods averaged right there. And then the 4. And what do we see once here it settles? Let's go right from here to here. What do we see right now? We see the price is aggregating over time, constant. The 2 and the 4 is parallel all the way from 4 o'clock when it ended to right here at 2:30. I just got above the 20. So we still have all these bars. Let's get rid of the bars. Let's make it easier. We're just going to look at the closing price because really that's the only thing that matters on each period. And we can eliminate all of the volatility. So what we have here, starting at about 2:30, it's probably even just a little sooner than that. It was trying to organize about 1. So when things matter, at 1 o'clock, the price got above the 20, the 2 and the 1, it was vacillating around. And then at 2:15, price started aggregating constantly. And look at this. This is done by a computer. This is not done by retail trading. If you get in down here, when you see this computerized trading at 377, you can ride it all the way up to right here is 390. What's that? $13 move. You make $13 and the price is going up every period. This is the 5-minute chart. Let's look at some other charts. Say if you use a 2-minute chart. I'm going to condense this down. The 2-minute chart is a little bumpier. There was only one time right here that the price of the stock got below the 4. Let's look at the 15-minute. All right. And oh, we got along. This is the 15. And this is the same time period. Look at this. Price got above the 20, stayed above the 20, went boom, below the 4. That would have been an entry point right there. And the price stayed above the 2 until 4 o'clock. What time did it start? Well, 2 o'clock is when it got strong. Let's look at the 30. And 30-minute. So we'll look at 13 till 4 o'clock. What do we see here? Price is above the 4 at this point, and it stayed above the 4 and stayed above the 4. So when you see multiple time frames, look at some different ways of looking at this. All right, so here we have comparison 2 charts. That's the 30 and the 60. They are consistent with each other. The 10 and the 15, they're doing the same thing. The 5 and the 5, this one of them on the right is candles, just for comparison, the 3 and the 2. And let's look at the 90. The 90 and the 120 and the 4-hour. Every one of them is pointing up. So what's the probability the stock price is going up? It's about 100%. This is what you want to trade. And this
7 p.m.
works also for longer term. So we can look at, let's look at weekly and monthly. So this is weekly and monthly Tesla. This is in October here. Let's get that, and we can see, get the right chart. Weekly, monthly, October. Okay. Oh, it's a different way here. All right. See right here? In May, June, we got above the 4. Boom, boom, boom. We can ride this all the way up. So it works on any time frame. This is not just with short time frames. This is long time frames. Look at that. And then we can look also here in October. Price got above the 4, and it's vacillating around the 2. Boom, boom. It's a little pullback. There was never any price lower than the previous. This was inside. Then it was up, sideways, up, inside, up. We don't have any reversals. A reversal is when the price, let's see if we can find a reversal here. This is a reversal right here. Boom, boom, boom. Then it came back up, and then it got above. So as long as there's no reversals, you don't have to leave the trade. You don't have to leave it early. But what chart are you trading on? Are you trading on a monthly? You're trading on a weekly? If you're doing that, you need to keep track of your entries on the shorter time frame. So if you're trading the monthly, which is here, which is that one on the right, you would look at the weekly to make sure that you have 2 consistent charts that don't conflict each other. You don't have one going up and one going down, and you want to do it at the beginning of the month. If you're using the monthly or the beginning of the week, when you trade in the middle of the month or middle of the week and you're using that chart, your direction is not as clear, and you have to manage your risk when you do any of that. So anyway, that's what I do. You can use 2 and 4 only and just use multiple charts like I have here. So I just have the 2 and the 4. Less is better sometimes until you get familiar with charts 2 and 4. When you compare them, you can see the direction. This is all the same charts. This is quarter and yearly. You can see 2 years up. We see 4 quarters up. Now we go back to my chart here, and this was 30 minutes for Friday from basically 1 o'clock all the way to 4 o'clock. And if you're day trading, this is what you want to look for. You do not want to day trade this. This is not going to work. This is 30-minute. We'll watch it on a shorter time frame. Let's do 5 minutes. And so we'll start here at 9 to 1. 9 to 1. How do you day trade that? You know, where do you get in? Where do you get out? There's some follow through here. There's definitely follow through here. At 12:45, it starts coming up. And yeah, so here you would have an entry point. Basically the 4, the 2, the stock price crosses the 20 and it never gets below the 20. So if you entered at 374, it comes up, it pulls back to the 20 and then takes off. So this would have, 1 o'clock would have been a good entry point. You look at the time. I always look at the second hand when I'm using my entry points, and you can use the 5 minute, the 10 minute, the 15, the 30, the 1 hour. The longer the time frame, the stronger the move will be. And if you start seeing, 1 hour time frames, let's see if we can find one. 1 hour time where it's going sideways, right here is a good example. Is that tradable? No. The stock price, the 2 and the 4 is all the same point. It doesn't deviate more than $1 over almost a whole day. So yeah, you want to stay away from this, and you want to look for this. When you get above the 4 and the price is above the 2, and you can move from here, 374 to 391. So, and I got any questions, send me a note. I'll respond. You have a good night.